Hello, fellow intelligent investors. As you probably know, China's regulatory tech crackdown has been dominating the news recently, and pessimism and panic have led to significant losses in Chinese stocks, basically across the board. Many well-known equities are even trading below their lows from last year's COVID-19 sell-off. And the internet giants alone lost billions, almost trillions of dollars in market value since their peak in February. Alibaba too has lost more than $300 billion in market value from its October high, just before Ant Group's IPO was pulled by Chinese regulators. So are these losses in market value justified, or are they just paper losses that will eventually be recovered? Well, there are certainly very good reasons to be concerned if you are invested in China. However, in this video I will argue that the media coverage has been overly sensational, and that the regulations may actually turn out to be a net positive for both Chinese society and Alibaba's business in particular. And to back up my point, I will reference two extremely skilled investors that have addressed this exact topic in their recent investor letters, Robert Vinall and Thomas Russo. So without further ado, let's get started. Alright guys, before we look at Alibaba specifically, let me first give you an overview of what has actually happened in China over the course of the last year. As I've said, there are certainly plenty of reasons to be concerned about investing in Chinese stocks right now. And the Western press is full of articles highlighting the risks as Chinese regulators have moved against all sorts of companies, both large and small. And they have in fact moved very quickly. Since November alone, the Chinese administration has announced 40 regulatory reforms. And if I had to highlight the key areas addressed by regulators, I'd certainly mention reforms aimed at improper financing practices in order to increase overall financial stability. I would say earlier this year, it basically all started when Alibaba's Jack Ma criticized the Chinese government, and quickly thereafter, the planned IPO of Ant Group was cancelled. The company was forced to be restructured so that it acts more like a bank and is supervised under banking regulations. Then in the subsequent month, regulatory action has spread to other sectors and increased in both frequency and intensity, and leading to increased panic of market participants. And other key areas that I would mention are data privacy and data security, working conditions of workers in the gig economy, after-school tutoring companies which were accused of deliberately creating anxiety, and they are now only allowed to act as non-profit providers. And then one would also have to mention anti-competitive distribution practices such as choose one from two, in which e-commerce platforms forced merchants to not do business on other platforms. And just recently, Chinese regulators have also put in place a new policy that limits online video game playing for young people to 3 hours a week. And the just mentioned steps are just a handful of the reforms that have been announced over the course of just 1 year. And as a result of these steps, many companies, such as Chinese ride-hailing company DiDi, or maybe e-commerce giant Alibaba, were confronted with sanctions and fines. Tencent Holdings, for example, has been subject to regulatory interventions too, and not too long ago the company pledged to give almost $8 billion to Chinese common prosperity initiatives. And just very recently Alibaba did basically the same, promising to invest $15.5 billion to foster common prosperity. And clearly all of this sounds very boring, right? Not only for Chinese stocks in general, but Alibaba's business in particular. I've just mentioned that they had to pay a fine for anti-monopoly behavior. Basically, they had to pay a record fine of $2.8 billion. And moreover, Alibaba has exposure to many of the areas that are now being regulated, that I have also just mentioned, either through directly owned divisions or through their investments in smaller startup type businesses. But is China really turning its back on capitalism? That is the question you have to ask yourself here. Well, in this video I discuss why increased regulation may be a net positive for both society and also investors with a long-term investment horizon. So, regulation is clearly increasing in China, but I think this is a rather positive development for Chinese citizens and for the overall business environment, leading to more healthy business practices. What's important to assess for investors is whether A, current regulatory efforts are a result of regulators' desire to over-regulate and punish certain individuals, corporate players or industries, or whether B, China has acted so swiftly because there was a lack of regulatory action in the past. Was the past regulatory framework maybe simply inadequate as it couldn't keep up with the pace of innovation? Personally, I think one can consider the latest regulatory actions as a belated response to the pace at which some of the Chinese companies have grown and innovated. They have simply regulated areas that in the past were only very lightly regulated. In fact, I think it is quite likely that Western countries will follow suit and implement stricter regulations on the dominance of big tech too. They too will strengthen the rights of temporary workers, and they too will pass stricter data privacy laws. Western regulators just tend to act much more slowly. But we are starting to see this too, as South Korea, for example, just recently passed a bill that limits Apple's and Google's control over App Store payments. And to quote from one of the letters that I mentioned in the introduction of this video, Robert Vinall concludes in his letter, "Overall, the changes to date seem manageable, except for companies that are viewed as having no societal benefit, who can expect little mercy from regulators. The pace of regulation is certainly faster than the West, reflecting the different political system in China. The priorities, though, seem similar. The conclusion that many seem to be drawing in the West, that China is uninvestable, strikes me as wrong-headed. I, for one, will not be deterred from investing further in China." Okay, before we move on to discuss Alibaba specifically, let me know in the comments down below whether or what you think. Is the government scrutiny in China good scrutiny or bad scrutiny? I think many investors suffer from a black and white thinking here. Chinese regulation bad, US regulation good. I think the truth usually lies somewhere in between, right in the middle. And this is something that Jake Taylor expressed in a recent The Acquirers multiple podcast as well. And I just wanted to show you a clip of this podcast episode here before we move on to discuss Alibaba.
It can take a lot of time, and it can be messy to get there. And, maybe China is getting there faster in some ways, and maybe they're not going exactly the same place the US ended up. I don't know, but I think there's a lot more to this, and it's much more multifaceted than just purely like, can't trust Chinese government, fraud, at these companies, or Chinese government whacking tech companies. I mean, I don't know. You think about the US and, if you have kind of stayed up on it, which I think most citizens have largely, or at least the people probably listening to this, they would say like, wow, the news headlines are so dumbed down and so one-sided and don't really show any nuance about the situations that you kind of know something about, right? And I think the same thing is happening there as well, where it's like there's a lot more nuance happening, and you get a headline and it's like, oh, you would just make it this blanket kind of statement, and then I think you sort of lose touch with the reality a little bit when you do that. Just like if you were to only read the headlines of the newspapers here, I think you might be a little divorced from reality.
So I'll leave the question of whether the regulatory crackdown in China has a net positive or negative impact on Chinese society up to you. However, when looking at individual companies, assessing the situation requires taking a much more nuanced point of view. For example, obviously companies operating in the for-profit education sector, they just got crushed. Basically, this industry no longer exists. But for other industries and companies, the situation might not be as bad as the media headlines suggest. Robert Vinall again notes in his letter, the financial impact of regulation varies by industry. In most cases, the financial impact seems to be at worst manageable and at best inconsequential. And when considering Alibaba specifically, Thomas Russo wrote in his respective letter that many of the demands President Xi Jinping and his associates have levied have served as disinfectants designed to combat toxic risks that have risen over decades of business misconduct. The government has set in motion steps which, if complied with, will in many instances make Alibaba's long-term business run more smoothly once the dust settles. And later in his letter he goes on to say, as the leader in so many of its businesses, it is our belief that the disinfectant that presently is being administered to China's businesses, social networks and political networks will eventually result in a world wherein the clear market leaders, like Alibaba, will eventually go from strength to strength as business practices become more fair and less cutthroat competitive. Alibaba shareholders should financially benefit from such reforms. So that's an interesting thesis. Alibaba's business is not damaged by the Chinese tech crackdown, but will navigate through the challenges and emerge even stronger. Yeah, and I will have a closer look at this thesis and outline how Alibaba's business might actually be strengthened in the long term, and how long-term shareholders can view the current situation in a more positive light. And I will discuss 4 aspects in a future video that I will just show you on the screen right now. So I say future video because I've decided to address these 4 areas in a separate video, because otherwise this video would get overly long. So please make sure to hit the subscribe button and the notification bell, to make sure you don't miss that follow-up video. And with that, I'm going to wrap it up here. And as always, may your finances and investments prosper. Good luck.